If you've ever wondered how professional traders scale their capital, or how you can tap into institutional-level market strategies without staring at charts all day, you are absolutely in the right place. Welcome to this explainer, where we're going to walk through the step-by-step foundational guide to Forex account management.
Here's our roadmap. We're going to hit 5 essential phases: securing your Forex account, unpacking how PAM and MAM actually work, hiring a Forex manager, weighing the pros and cons, and finally, funding your managed account.
Let's kick things off with Phase 1, securing your Forex account. This is your first line of defense. We have to start at the absolute baseline here. Interestingly, the sources we're looking at don't frame cybersecurity as just a good idea or a mere recommendation. It is a strict compliance necessity in the financial world. Seriously, you can't even play the game safely if you leave the front door wide open to digital fraud. Without ironclad security, your capital is vulnerable before a single trade even occurs.
To actually lock down your dashboard, 3 things have to happen right out of the gate. The second your broker gives you a login, change it to a complex alphanumeric string. No easy passwords here. Next, you've got to hook up 2-factor authentication on platforms like MT4 or MetaTrader 5. That way, even if your password leaks, hackers hit a brick wall. And for the pros, it's all about using a virtual private server, or VPS. This guarantees a lightning-fast encrypted connection, meaning you completely avoid the nightmare of checking your portfolio on public Wi-Fi.
Moving right along to Phase 2, how PAM and MAM work. Consider this the technology bridge.
Let's pull back the curtain on how one expert actually manages multiple retail investors at once. The engine driving this whole operation is called automated replication. It's a brilliant system that allows a master account to execute a trade that instantly mirrors across all connected client accounts in real time based on their equity ratio. And the best part for your peace of mind? These structures ensure your segregated funds are traded securely without the manager ever having the ability to withdraw them. Your capital stays right there in your name.
You're mostly going to encounter 2 main systems here. Think of PAM, the Percent Allocation Management module, as a communal pool. The manager risks their own money alongside yours, and profits or losses are distributed by percentage. It creates a highly transparent incentive because the manager actually has skin in the game. On the flip side, a MAM, or multi-account manager, provides a lot more flexibility. It offers customized leverage and specialized risk allocations tailored specifically to your individual subaccount. All right, Phase 3, hiring a Forex manager and finding regulated professionals. So who is actually piloting this technology? Can just anyone step up to manage your hard-earned account? Technically, sure. But legally, authorization is completely non-negotiable. For example, in the UK, entities offering these services absolutely must be authorized by the Financial Conduct Authority, the FCA. Honestly, hiring an unauthorized manager without verifying their compliance with local regulators is unequivocally one of the costliest mistakes an investor can make. Just don't do it.
When you look at the top-tier brokers supporting these services for 2026, some distinct advantages emerge. FP Markets really leads the pack with advanced MAM and PAM portals alongside raw spreads starting from 0.0 pips. Then you've got AvaTrade, bringing features like AvaProtect and DupliTrade to the table, while IC Markets delivers deep liquidity and ultra-low latency execution via NY4. The main takeaway here? You need a broker with serious institutional infrastructure to actually support professional management.
Now for Phase 4, weighing the pros and cons. It's time for a reality check. Before committing any actual funds, we need to weigh the stark benefits against the costs. On the upside, professional management gives you a massive psychological edge. Why? Because algorithms and seasoned experts don't panic sell. They aren't swayed by the fear and greed that routinely crash everyday retail traders. You also gain access to advanced institutional tools and indicators, all while enjoying a very time-efficient passive investment journey. But there is a number you absolutely cannot ignore here: 20 to 30%. Most professional managers charge a hefty 20 to 30% performance commission on your gains. Yes, this is how they get paid for their expertise. But that is a significant chunk of your profits. Beyond those high-performance fees, you have to be willing to surrender control. You can't just manually close a position when you get nervous. Doing that actively restricts and ruins the overarching strategy. And crucially, you have to accept market risk. Even the absolute most brilliant, highly regulated manager in the world cannot magically erase risk or guarantee returns during a volatile economy. Which brings us to our final phase, Phase 5, funding your managed account and making the deposit. If you've weighed all those risks and you're ready to proceed,
Your money has to move into a segregated account. But first, you've got to jump through some regulatory hoops. Strict anti-money laundering, or AML procedures, demand concrete verification of your identity and residence, usually requiring a copy of your ID and a utility bill. It might feel a bit tedious, but this compliance is exactly what keeps the entire financial ecosystem secure.
Once you're verified, you have a balancing act to perform to meet that minimum deposit requirement. Traditional bank wire transfers are incredibly secure for massive amounts, but they do take days to process. On the other hand, e-wallets like Skrill or Nettler, along with credit and debit cards, are much faster but usually come with lower limits. Or, for a decentralized and lightning-fast route, brokers are increasingly accepting crypto through exchanges like Bybit or MXC.
The world of foreign exchange is a constantly dynamic cycle of opportunity and risk. Utilizing managed services can be an incredible wealth-building tool, but it requires cold, hard data at every single step, from your initial login setup to selecting an FCA-regulated expert. So, as we wrap up this explainer, I'll leave you with this. Are you truly prepared to approach wealth creation with the concrete discipline and diligence required for the high-stakes world of Forex?